Welcome to TRADEREP. This is Short Hammer. It is the 9th of July, 2019, and we're looking at Amazon. Now, if you look at Amazon, the last time we pushed through we were hanging around this 1923 to 1960-ish area. The catalyst that it took to push us through this little scrum at the 1914 by 1920s was earnings. And we had a nice little gap up here. Then we had some profit taking for a few days. Then we had a gap up again here. And then we just sold off. And if you remember what was going on during these times, there were trade war news catalysts that were sort of driving us down before we bounced, and the market just pushed back to the upside. Now, what we want to watch is Amazon seems to have had trouble above the 1936 area into the 1960s. So we want to see this time if we continue on this uptrend that we're on the daily chart. We want to see if this continues. So this is something to watch. Our support for today is not only the 1943, 1940, 1936 area, but also down here to where this trend line interacts with our supply demand zone, this 1923.75 area also. So if we go to a 5-minute chart, if you watch Amazon, we opened up, we rejected the 200 SMA on the 5-minute, which I don't have on this particular chart, and we dropped, and you saw a few higher low patterns here on the pivot. Let me zoom in. And this one is a higher low pattern, but you never saw a higher high. The candle never closed on the 5-minute chart above the previous candle. The first valid higher low, higher high pattern that you would want to try to enter on if you wanted to trade Amazon would be the second one here, where we made higher lows, held the pivot, and also made higher highs here. On that next candle is where you want to get in, and your stop could be the low of the previous candle, and it could also be low of day because it's so close. That's also a good stop to have. But you want this higher high pattern to continue, and you watch this push into 1936 to see what it does. And that was a potential quick exit if you didn't see what you wanted to see into these 1936s. But we saw the buyers start to step in and start to push us up and push the market up. And also, if you were looking at Microsoft at that point, Microsoft was also, it had a similar, almost the same exact pattern, that almost double bottom, higher low setup and a push and squeeze to the upside. And here Amazon held the main intraday pivot. You saw a little pullback here from this 1943 area and a hold here. And then the buyer stepped in again. And for me, the exit would be here. The first lower low, lower high candle, the way that this closed, it's time to get out. And on this pullback, what we were mentioning in our chat to people was watch the 1943 and the 1940 area for buyers to step in. And in the 1943s, buyers tried to step in and push it back up, but they just weren't successful. And in the 1940s, that's really where you saw the buyers really come in a little bit stronger, push us up, level us out. And then we started to see a climb in Amazon. And the overall market, you really start like Apple started to push a little bit, then Facebook started to push, and so the overall market was starting to really wake up and push along with Amazon. Then you saw into the close, we saw this little pop. So for tomorrow, what we'll be watching on Amazon, we will be watching the main intraday pivot is at 1945. So we know that below that 1945, that yesterday we had buyers at the 1943 level. We had buyers at the 1940 level. And we still have our 1936 line, supply demand line here. And we have our 1959, 1964 supply demand zone overhead. So that's the levels you'll watch below. We'll see where we open. But if we open above 1945, then we know that below that we have 1943 and 1940 to watch for buyers to step in and push us back up. And above that, we have the 1959. At any point during the week, remember, we could become range bound on Amazon, where we just move within a 10-point range up and down. But just wait to see if that range develops or if we break and we're going to run. So keep an eye on the high from yesterday. It looks like the 1956s, roughly, something around there. And watch pre-market, and then take a look at the overall market and see which direction Amazon goes. If we have a consolidation day, if we have a day where we pull back to some demand levels and we hold, go sideways a little bit, or if it's also ready to run again. Prime Day, I believe, is next week. I think potentially the 15th and the 16th. And then you have earnings for Amazon coming up on the 25th of July. But looming over all of this, remember, is the interest rate cut stuff. So even though we have Prime Day coming up, and that's a great catalyst, you got to be careful because we also have the Federal Reserve members speaking this week. And this is their last week to speak before, I believe they call it the blackout period, where they can't really comment or speak. And within this period, they may come out with, like, the next time we hear from them, it could be, hey, we have interest rate cuts. So this week, people are going to be really meticulously watching what they say and the words they use to see if they're leaning more dovish or more hawkish to try to get a hint of the direction that they may be leaning in the upcoming meetings. So be very careful because, yes, we do have catalysts on Amazon and other tickers. We're heading into earnings, but looming large over all of that is the interest rate cuts. And the trade deal and the trade news is taking a back seat to interest rates. That's what the U.S. market is watching right now. What is the Fed going to decide on interest rates? So, not to rain on the parade, but watch Amazon. You have your levels, but also keep your eye on the news to see if anything comes out from what any of the Federal Reserve members may say that may give us a hint as to what they're thinking.